From the moment Bitcoin first breached the $100,000 mark, the crypto community has dreamt of the next great surge. Today, as BTC hovers around $107,000, with 6 days of anomalous calm volatility tucked below 3%, those dreams are being reborn. Beneath this placid surface lie powerful macro forces converging to propel Bitcoin past $110,000 before July's end. In this exploration, we dissect 4 pillars of support currency: dynamics, equity market momentum, passive capital flows, and monetary policy signals through the prisms of leading economic thinkers. 1. Currency dynamics. The dollar's push and pull. Bitcoin's inverse dance with the US dollar is legendary, but the story is more nuanced than simple counter-movement. Between August 2024 and April 2025, BTC climbed dramatically, even as the DXY index rose from 100 to 110. When the dollar strengthened, Bitcoin still rallied until the DXY retraced to 104. Today, a softer DXY promises renewed tailwinds for crypto. Milton Friedman's monetarist framework teaches that currency debasement fuels demand for alternative stores of value. If the dollar weakens, American purchasing power falls and investors seek refuge in assets outside the fiat system. But John Maynard Keynes reminds us that it is not just fundamentals but market psychology, animal spirits that ignite momentum. A noticeable slide in the DXY, coupled with upbeat growth in other economies, could unleash speculative zeal in Bitcoin, amplifying any technical breakout. At present, the DXY sits near 104. A move back toward 100 or lower would unsettle Treasury yields and spur capital flight into risk assets. When investors see the dollar succumbing to inflationary pressures, they recall Bitcoin's capped supply and decentralized nature. As the DXY falls, Friedman's thesis and Keynes's emotional drivers unite to push Bitcoin upward, laying the groundwork for a run past $110,000. 2. Equity markets. Tech stocks fueling crypto flows. No discussion of Bitcoin's ascent is complete without crediting the U.S. equity markets, especially the tech-heavy Nasdaq 100. On June 30, 2025, that index closed at an all-time high, buoyed by blockbuster earnings and optimism over AI adoption. Parag Khanna's analysis of global supply chains underscores why a soaring Nasdaq matters for Bitcoin. Nearly half of Nasdaq 100 revenues flow from overseas, so a weaker dollar inflates foreign earnings in dollar terms, inflating share prices. Darren Acemoglu's work on innovation and growth reminds us that when technology firms thrive, they generate wealth that often bleeds into adjacent markets. Institutional investors, flush with gains, rebalance portfolios, locking in profits by selling large-cap tech and reallocating to high-beta assets like crypto. In this echo chamber, Bitcoin emerges as the ultimate tech play, offering outsized returns to those chasing the next frontier. Further, Daniel Kahneman's prospect theory insights show that investors who enjoy gains in equities are more willing to accept risk in pursuit of further upside. After a lucrative run in the Nasdaq, the mental accounting house money effect can drive fresh allocations into Bitcoin. Thus, a breakout in U.S. tech stocks doesn't just signal a bull market, it transfers momentum and capital directly into the crypto realm. 3. Passive capital flows. The S&P 500 rebalance and MSTR catalyst. Every quarter, trillions of dollars of passive money must track benchmark indices. When constituents change, index funds buy or sell accordingly. This invisible tide of capital can lift or sink individual stocks and, by extension, everything those companies hold. Enter MicroStrategy, MSTR, the corporate poster child for Bitcoin adoption. Joe Burnett of Semler Scientific argues that an S&P 500 inclusion for MicroStrategy would trigger massive passive inflows. Vanguard, BlackRock, and State Street would be forced buyers, acquiring MSTR shares in direct proportion to their fund rules. But because MicroStrategy's balance sheet is laced with Bitcoin over 200,000 BTC at recent estimates, those passive flows translate indirectly into demand for the cryptocurrency itself. Jane Jacobs's observations on the spillover effect in urban economies find a parallel here. As passive capital floods into MicroStrategy, it enhances the company's market capitalization, strengthens its credit profile, and underwrites further Bitcoin purchases. The resulting narrative, every share bought funds more BTC, creates a feedback loop that can lift Bitcoin's price. With the S&P 500 rebalancing scheduled for mid-July, this catalytic event could be a key driver in breaching the $110,000 barrier. 4. Monetary policy. The shadow of a rate cut. Rumors swirl that the Trump administration is preparing to replace Fed Chair Jerome Powell with a dove. President Trump has publicly lambasted Powell for holding rates at 4.25% instead of slashing them to 1%, a move he insists would ignite stock and housing booms. Whether or not that political play comes to pass, the mere prospect of dovish pivot sends ripples through markets. Milton Friedman taught that real interest rates dictate the opportunity cost of holding money-like assets. Lower nominal rates erode the yield on treasuries, enhancing the appeal of non-yielding stores of value such as Bitcoin. Meanwhile, John Maynard Keynes highlighted that when policy looks set to loosen, speculative froth often appears well before cuts arrive. Traders front-run anticipated easing and bid up risk assets. The Kobisi letter, an influential crypto economics newsletter, has forecast that a cut to 1% would unleash unprecedented flows into stocks, real estate, and crypto alike. In a world of near-zero or negative real rates, Bitcoin's fixed supply looks ever more compelling. Even if the Fed merely hints at future accommodation through dot plot projections or forward guidance tweaks, animal spirits could drive BTC northward toward $110,000 and beyond. 5. Volatility contraction. The calm before the storm. A critical technical prelude to any breakout is a period of low volatility. For 6 consecutive days, Bitcoin's 24-hour ATR has hovered below 3%, the calm that precedes the storm. Daniel Kahneman's research on risk perception shows that traders grow complacent during quiet markets, narrowing bid-ask spreads and increasing leverage. That trapped energy often fuels violent moves once a trigger appears. Joseph Schumpeter's theory of creative destruction in markets suggests that long periods of stability sow the seeds of rapid transformation. As volatility coalesces into a tight trading range around $107,000, even small catalysts, say, a 1% dip in the DXY or an uptick in equity market momentum, can ignite short squeeze rallies and cascade into a broad buying surge. The ensuing volatility expansion can carry BTC swiftly past the $110,000 threshold. Moreover, Mariana Mazzucato's emphasis on the role of the state in fostering innovation reminds us that low volatility environments attract institutional entrants. Hedge funds, family offices, and corporate treasurers are far more likely to pilot crypto allocations when risk appears contained. The longer this calm endures, the stronger the base of buy-side conviction that will drive Bitcoin's next leg up. 6. Global growth versus U.S. output. A divergence play. Although the United States contributes roughly 26% of global GDP, nearly 46% of Nasdaq 100 revenues derive from overseas markets. As Parag Khanna documents, globalization has tethered tech sector fortunes to foreign consumers. A weaker dollar thus inflates the dollar value of those foreign revenues, boosting U.S. equity prices. Vaclav Smil's data-driven analysis of growth cycles shows that when multinational earnings swell, capital recirculates back into the domestic financial system, fueling higher asset valuations across equities, real estate, and crypto. Bitcoin, as both store of value and speculative play, sits at the nexus of this dynamic. Foreign investors who profit in dollars may redeploy gains into Bitcoin, further amplifying the upward thrust. This divergence play, long tech sector equities and long Bitcoin, can be a powerful two-pronged strategy. When global growth outpaces U.S. domestic demand, the combined impact of a weaker dollar and strong corporate earnings forms a virtuous cycle that lifts Bitcoin toward $110,000. 7. Narrative momentum. The power of story. No bull market is sustained by fundamentals alone. There must be a story that captures the collective imagination. Keynes likened markets to beauty contests. Investors choose assets not for their intrinsic value, but for what they believe others will prize. Today's prevailing narratives include Digital Gold 2.0. With persistent inflation readings, PCE at 2.3%, Core PCE at 2.7%. Bitcoin's fixed supply resonates more than ever as a hedge against fiat debasement. Tech safe haven. After hypertech gains in AI and biotech, investors seek the next frontier. Bitcoin, with its cutting-edge blockchain technology, offers that frontier. Antifragile asset. Following Nassim Taleb's thesis, Bitcoin thrives under uncertainty from geopolitical ruptures to central bank missteps, making it the ultimate portfolio diversifier in turbulent times. When these storylines align, backed by real-world data and expert endorsements, capital flows follow the narrative. Media coverage, social media amplification, and thought leader podcasts all play roles in broadcasting the bullish message. As the story of $110,000 gains traction, self-fulfilling prophecy kicks in. FOMO draws new participants, accelerating the run. 8. Infrastructure and adoption. Building the on-ramp. Beyond headlines and macro currents, Bitcoin's rise depends on seamless access. Don Tapscott's work on digital finance underscores the importance of robust on- and off-ramps. Today, major custodians like Coinbase Custody, BACT, and institutional desks at Goldman Sachs provide secure gateways for whales and pension funds. Meanwhile, retail platforms from Robinhood to PayPal keep the retail engine humming. Each onboarding, each KYC verification, each fiat deposit builds the pipeline for new capital. As these rails expand and integrate with decentralized exchanges, Bitcoin's addressable market widens. Amy Webb's vision of technology adoption curves reminds us that infrastructure maturity often precedes explosive growth. As custody solutions, regulatory clarity, and OTC desk capacity coalesce, barriers to entry fall. When the final PSA, AUS spot, Bitcoin ETF arrives, the floodgates open. The expanded on-ramp network will channel unprecedented flows into Bitcoin, strengthening its bid to cross $110,000. 9. Risk factors and mitigations. Nothing is preordained. Several risks could derail the run. Fed hawkish surprise. If inflation persists and Powell or a successor reigns in accommodation, the reflation trade may falter. Regulatory backlash. Sudden crackdowns, be it a hostile securities act ruling on BTC or capital controls in key markets like India or China, could spook investors. Tech sector correction. A broad sell-off in Nasdaq Titans could drain momentum from Bitcoin as portfolio rotations reverse. Geopolitical shock. An escalation in global conflict or a major cyber attack on exchanges could trigger flight to cash. Savvy investors hedge these risks via option structures, calls with defined risk, dynamic rebalancing, and geographic diversification. But ironically, Bitcoin's anti-fragility, its very capacity to thrive on disorder, means that each shot can, over time, reaffirm its narrative as an indispensable asset. 10. The final countdown. Timing the breakout. To breach $110,000 by July 2025, Bitcoin needs these elements to synchronize. A weakening DXY that rekindles demand for non-dollar assets. Nasdaq 100 outperformance driving risk-on flows into crypto. Passive inflows via S&P 500 rebalancing into MicroStrategy. Concrete hints of Fed easing unleashing animal spirits. A volatility squeeze that bursts into sustained upside. Robust infrastructure enabling floods of institutional and retail capital. A captivating narrative that unites market psychology behind BTC. When Joseph Schumpeter's waves of creative destruction collide with Vaclav Smil's exponential cycles of growth. When Keynes's animal spirits roar alongside Friedman's monetarist undercurrents, Bitcoin stands poised to vault past $110,000. The stage is set, the catalysts align, and history beckons. Whether in the final days of June or the first half of July, the coming breakout may be one for the record book's proof that in the interplay of markets, policy, and human psychology, Bitcoin remains the ultimate bellwether of our age. Watch closely. The next chapter in digital asset history may be written in the 3 digits that follow $110.